I think that gold is going to continue to rise. And listen, there'll be some pullbacks. We're not going straight up, but I certainly wouldn't be surprised if we saw 3,000 by the end of the year. I certainly wouldn't be surprised if we saw $36 or $37 in silver by the end of the year. I think they are in demand, and I think a lot will depend how this election plays out, because I think that if Kamala Harris wins, I believe that the economy will tank. I do believe that gold and silver will rise. Okay. And if Trump wins, I think gold and silver are still going to go higher, but I don't think they'll go up as fast as they are going up right now.
The precious metals market is on a significant upward trend, with gold prices showing impressive growth over the past year. According to goldprice.org, gold has risen by 45.93% year over year, including a notable 6.58% increase in just the past 30 days. Currently, gold stands at $2,644.38 per troy ounce, and market experts anticipate it could reach a historic $3,000 milestone by the end of 2024. Veteran financial analyst and trader Todd "Bubba" Horwitz lends credence to these bullish forecasts. While acknowledging the likelihood of periodic pullbacks, Horwitz maintains an optimistic outlook for both gold and silver markets. His projections align with the broader market consensus regarding gold's trajectory toward $3,000, and he specifically anticipates silver prices reaching $36 to $37 per ounce. The silver market's outlook appears particularly promising for long-term investors. Analysts broadly support projections of silver reaching $37 in the coming months, highlighting its potential as a wealth haven asset. For retirement savers, silver's historical performance and stability make it an attractive option for long-term wealth accumulation strategies. Horwitz draws important connections between rising gold prices and inflation trends. He points to increasing demand for hard assets, including gold, though he cautions against its use as a primary hedge for equity positions. Historical data supports a correlation between gold prices and inflation, albeit with an average one-year lag time. However, it's worth noting that percentage changes in gold prices don't precisely mirror consumer price increases. Beyond its relationship with inflation, gold continues to serve as a crucial hedge against various economic uncertainties. Investors particularly value gold during periods of currency devaluation and political instability, reinforcing its status as a traditional safe haven asset. Before we dive deep into this video, don't forget to subscribe to our channel, hit the bell icon for notifications, and share this video with others who might benefit from it.
You need to buy real gold and silver because there's a real good chance that the monetary system could collapse, and you might need gold and silver to buy goods and services, because I think you can see, first of all, gold is obviously skyrocketing higher, as is silver, although silver's not anywhere near as high yet, but someday it may get there. But what you see, people are starting to recognize Costco selling gold bars. Every time they bring them in, they sell them out. I'm telling you that this is a real problem. The cartel, the monetary system is a joke because no currency has any backing, so they can do their own little bit of fancy accounting and devalue currency, which is why the money supply is so huge, because the dollar is worth nothing. A higher gold tells you that inflation is going higher. Okay. The demand for gold is higher. The demand for hard assets. People use it. Some people believe that using it hedging their equities, which is not the proper way to hedge your equities. There are better ways to do that. But again, it is good to have a representation of hard assets. And again, I'm wondering, and this is always a big question, is there as much gold as we think there is, right? This goes back to the scam of the banks that are pretending, because banks lend out at a fractional banking at 10 to 1, supposedly. But there are stories that when they were using gold as the reserve, that they were painting gold bars gold. They were just like planting Bix gold, so it looked like they had it. So I think that gold is going to continue to rise. And listen, there'll be some pullbacks. We're not going straight up, but I certainly wouldn't be surprised if we saw 3,000 by the end of the year. I certainly wouldn't be surprised if we saw $36 or $37 in silver by the end of the year. I think they are in demand, and I think a lot will depend how this election plays out, because I think that if Kamala Harris wins, I believe that the economy will tank. I do believe that gold and silver will rise. And if Trump wins, I think gold and silver are still going to go higher, but I don't think they'll go up as fast as they are going up right now. Well, I think it's always good as an investment. I think that every portfolio that's out there should have, 5 to 10 to 15% representation of physical metals. Again, I'm going back. I don't want paper. I want physical. I want hard assets, and I want to put them in. I want to touch them. I want to feel them. I think that A, they're a good investment. They've shown that they go up year over year. Okay. B, they may be needed as a currency. So again, if things go the way they could go, and we've seen this in the past in many major empires, if dollars become worthless, how are you going to buy groceries? How are you going to buy food? How are you going to eat? How are you going to live? And that's why I think that is also a bearing, because it is a hedge against inflation. And I give you one quick example. I don't think you're old enough, but in 1964, we stopped making silver, right? In 1964, one silver quarter would buy 1 gallon of gas. Okay. Actually, a little bit more. Gas was 19.9. Okay. One quarter today is worth about $8. So it would buy about 1.5 gallons or 2 gallons worth of gas right now. So you can see what's happened by the system and by the devaluation of currency of where we are now. Because again, if I can take the silver back in those days and what it's worth now, then I have no inflation to deal with.
Horwitz highlights a significant disconnect between Federal Reserve policy and real-world borrowing costs, advocating for a free market approach to interest rates. He argues that current market indicators suggest the Federal Reserve rate should naturally settle between 7% and 8%, substantially higher than the present rates. This argument gains weight in light of the Federal Reserve's recent decision to reduce its benchmark rate to a target range of 4.75% to 5% through an aggressive half-point cut. However, this reduction starkly contrasts with actual borrowing costs across various sectors. This disparity is particularly evident in consumer lending, where credit card rates have surged to unprecedented levels. The average retail credit card interest rate has climbed to a record 30.45%, significantly exceeding the typical credit card rate of around 21%. Horwitz links the recent Federal Reserve rate cut to rising interest rates, noting that rates have increased daily despite the reduction from 5.25% to 5%. The ongoing rise in interest rates, even with easing inflation just above the 2% target, raises concerns about the effectiveness of this monetary policy. Let's get back to the video.
We have a world that's trying to get globalization, okay? They are trying to turn the United States into either a communist country or a socialist country, but neither is good. They are trying to destroy capitalism. And of course, I want to tie this into the rate cut that we had 2 weeks ago. Realize this, everybody who's watching this, interest rates have gone up every day since the Fed cut rates, because the rate cut is not for the average person. The rate cut is for the banks. The banks borrow from the Federal Reserve, and they work on a spread when they're lending. So all they did is give the banks a bunch of money, which is going to create much more inflation. And when they create more inflation, we get taxed. It's called the hidden tax of inflation, because everything you buy at every store, at every gas station, wherever you go, there is a federal tax on it. So the federal government can't raise your taxes, but if they raise inflation, which they've been telling us they're trying to cut, which is all BS anyways, if they get inflation higher, they get more tax dollars from you. Where the banks are, in my opinion, are in big trouble. We know for a fact that 1,200 regional banks have claimed that they're in trouble. So you don't think that the bigger banks in trouble? They are over leveraged. And there's a little gimmick. You know, when the bank borrows money from the Federal Reserve, okay, they take that money that they borrow, but they can flip it around from a liability to an asset, which then allows them to lend out 10 times that amount back to the consumer. So they're actually creating money as well. And we're seeing a destruction of the currency, because the fiat currency system is manipulated and criminal by the cartels anyways. And I'm talking, when I say cartel, that's the Federal Reserve and the central banking system around the globe, because they are all stealing from their people. And this has been going on since the 1600s in England. Because I thought Jerome Powell, when he was first appointed, was a good choice, because he came out of our industry. And I thought he understood the free market. But I guess when you go into the glass tower of the Federal Reserve, you become a moron, because cutting rates here can only create inflation. Okay. And one thing we know for sure, Patrick, the free market will tell you what something is worth. You want to know what interest rates should be? All you have to do is look at what is the average consumer paying if they're borrowing money. Mortgage rates are up again. Mortgage rates in Nevada are 8%. Okay. And of course, if you look at some of the peer-to-peer lenders, okay, they're getting 12, 13, 14, 15%. And of course, credit card interest is 25%. So if you let the free market decide what the interest rate would be, it would probably be 7 or 8% at the Fed rate. But they want to continue to try to control and manipulate dollars to get this economy rolling, because they've dug such a deep hole of debt that you're never going to get out, and you cannot continue to kick the can down the road, because you have no more jobs to create. Remember, this is we don't have the Industrial Revolution anymore, and we are going to be stuck until the youth grow up, because those are the ones who understand all this technology. People that are, let's say, 50 and over, they couldn't write code, is for the most part. I mean, there's a few, I'm sure, but in general, most are not capable of keeping up with the industry. So if they have to get a job, they're going to have to get some crappy service job or go to Walmart and make $12 or $13 or $14 an hour. And if you look at the Constitution, government should be run city, county, state. The federal government was never intended to be the largest employer in the world. Okay, they were only supposed to oversee, not employ more people than anybody else. So Jerome Powell, the Federal Reserve, the government has not engineered anything but a pain and a lot of pain for Americans, because we are in a recession, no matter what the moronic economists out there who keep saying. But of course, we know that the economists don't tell us until 10 years later, and they say, oh, well, in 2024, you were in a recession. Well, I want to know now, but I do know now because I can see it from the people and how their spending habits and where they're going.
Gold is approaching significant milestones, with the precious metals market increasingly influenced by rising interest rates and inflation concerns. Central banks' manipulation of rates highlights gold and silver's value as hedges against economic instability. With inflation eroding purchasing power, investors may increasingly turn to gold and silver, solidifying their role as reliable stores of value in uncertain times. What are your thoughts on gold's potential in the current economic climate? As we wrap up, remember that staying informed is key to navigating these uncertain times. If you found this video valuable, please like, share, and subscribe for more insights. Your support helps us continue to bring you the latest updates in the world of finance. Thanks for watching, and see you next time.